Farm4Profit Podcast. Take a listen, have a blast. Farm4Profit Podcast. Learn about farming while having a laugh. Farm4Profit Podcast.
Yeah, I gotta wait for Corey to get off his phone. Our listeners are ready.
Our listeners. Yeah, they're just sitting there waiting.
They are. This is how the show's going to open up.
A month from now.
The show is going to open up.
They're
with
like,
you
come on
your phone, just waiting for you to get started.
Are our cameras on?
Everything's
I
going.
can't tell if that camera's on because you got your teleprompter up there telling you what to say.
Everything.
Have you ever seen a
what to say.
teleprompter? That's a teleprompter. Yeah. It doesn't say anything on it right now.
Yeah, you got to put your iPad right in front of it, and then it rolls the script for you. It's pretty cool.
Oh, fucking sweet.
Yeah.
You could run for president.
This new studio stuff, I tell you what, yeah. That is what this is. We're going to say we're recording this on April Fool's Day and that Farm for Profit is scripted. It's all read off a teleprompter.
There you go.
We have 17 of them because I always look this way and you always look this way.
Well, that's what the president does.
Just a new teleprompter everywhere.
Yeah.
All right, let's get into this because we get to have one of our most listened to guests of 2023 back onto the podcast in 2024. And I'm not going to sugarcoat this, but I had no idea Justin was going to be this popular. Did you know when we recorded the first show how many people were going to not only listen but then engage?
Before the show, I knew it would be good because obviously I have experience with him. But in the middle of it, I think when he was talking about managing hundreds of thousands of acres not in the U.S., it was going to be pretty polarizing. Yeah, that definitely drags out a lot of people.
Let's remind our listeners, if you were like the 6 people that didn't out of America listen to that episode, you need to go back and pull that up because Justin is a 5th generation Iowa farmer, but has not always farmed in Iowa. He has actively farmed on 4 different continents and has spent his entire career working in ag across mostly North America, USA and Canada, South America, Europe, and Africa. So Iowa State alum, go Clones.
Yes. And
has done a lot of really cool things since then. When we talked to him the first time, we wanted to get his story on what it was like to farm in Ukraine, in Europe, and to learn about Maya because we were out at Husker Harvest Days, Grand Island, Nebraska, sitting in their booth. What a beautiful afternoon. I remember how nice that was. I wouldn't want to be outside today.
It was a little windy, wasn't it? Or was that the next day?
It's Iowa, Nebraska. It's always windy.
Yeah, that's true. That's true.
Blows everywhere. But welcome back to the podcast.
Thank you guys for having me. It's an honor, and I enjoyed the first go around, and I'm looking forward to elaborating a bit more on it on this one.
So the just for reference, that show came out October 26th of 2023, and it was a fun show. So,
that's right.
Yep.
We're still going to have fun today.
You were kicking back. Today, we're having the show. We're drinking coffee. We were drinking some beer, I think, that day. So,
but I'm excited because we teased that we were going to have another conversation just because of the experience that you have. And today, once we get into the meat and potatoes of this, we want to learn what you've gathered from those who are investing in farmland, what they look for, why they look for it, and where this value is for trying to draw a little bit of a conclusion from the outside looking in. We know, as listeners and Farm for Profit, that there's a lot of people that will keep family land in the family, and there's some that can't keep land in the family. And maybe this will shed a little bit more light on some creative ways to get some more information put out there. Wouldn't you say?
I would say that. And, I mean, you'll notice that our land expert is not here. David.
Yeah, that was on purpose.
On purpose.
You can't have 2 experts on one show.
Right. No. So Justin will be our land expert today, and he's uniquely qualified for it. And I'm going to let Justin say why, so we don't step on any toes on that. So what makes you qualified, or what's your experience with land?
Yeah, from a land basis. So after I came home from Ukraine. So we started Maya back in 2013 while I was in Ukraine farming, and came home in 2014. Honestly, at that time, it was not a superb time to carry an American passport in Ukraine with everything going on after the Maidan Revolution and Crimea, which is not as significant as what's going on today. But I honestly came home planning to come back to Northwest Iowa and farm, and then had an opportunity to to go to Canada. Ended up moving to Regina, Saskatchewan,
Yep.
and spent 4 years up there buying and managing land for a Canadian pension plan. And so we built about a 175,000 acre portfolio in Saskatchewan and Alberta, where we went out, bought farmland. If you boil it down, you bought farmland, leased it to local farmers, and let them farm it. But what you learn through the process is how to go out and actually evaluate farmland, look at what you want to own, how you structure leases, how you structure purchase sale agreements when you buy that land, and then how you really look at the economics of, does it make sense to own this piece of property versus the one over here. And there is a complete and utter different look of how you look at farmland if you're looking at it as a farmer that's going to have an emotional tie that wants to farm it, and if you're looking at it as an investor that's looking to put his money in envelope A or envelope B. And so there's a complete different approach. I coming from the farming side, it was very easy for me to look at it from an emotional standpoint of, oh, this is a beautiful farm, I want this farm. Sometimes the most beautiful farms are not good investment farms, and the ones that are ugly are actually a really good investment. Sometimes it's flip-flop. So I spent 4 years doing that, and then I've had the opportunity to do a decent amount of that in the U.S. for some high net worth investors as well. So I've had about 9 going on 10 years of experience of buying land and valuing it the way an institution would look at it, or an institutional investor type would look at it versus a farmer. And so one of the unique things I think for me that has helped me is I get to look at it wearing both hats. I look at it as though if I was going to buy that farm and farm it myself, and I also look at it as, is it going to be a good investment? And I think overall, everybody, if you're a farmer, you make your money operating your farm. Grow crops, you sell them for a cash positive return. You're buying land, whether you farm 160 acres or 16,000 acres, you're now in the investment side, because that's what you're making, is you're making a long-term investment. So I think it's a really important topic and an interesting topic to look at, how you evaluate farms, how you go through the process and why, and how you'd look at it from a investor standpoint versus the farmer standpoint.
Which we've wanted to start that from the beginning of Farm for Profit. One of our first shows was, how do you take the family business and run it like a business?
Yep.
And that's exactly what I remember talking to you about. We asked you questions about, how do you know when it's time to add another grain cart, add another combine? When you're running an operation of size, it'll be exciting to pick your brain, because I feel like in all aspects of your farming career, you've been able to compartmentalize and not use emotion for the most part. You identified Maya because of a necessity for, I need something that works and runs and is going to stand to the time of all of my hired hands.
Yeah.
Needing something durable. It wasn't I need something that fits my budget. I need something that, whatever it was, you've used this same thought process in all areas of your farming experience.
Correct. And it's a great parallel, because I look at the Maya business much in the same aspect of, it's there's a bit of emotion with that. There always is. But you have to look at it as, is it the right product for the long-term fit? Does it make good economical sense? And can you extrapolate that out over a long-term basis and remove the emotion out of a love for green paint, red paint, yellow paint, etc.? And you do much the same thing in land. It ultimately comes back to, you remove the emotion out of it, because the investor sitting in Wall Street or San Francisco or London is not making investments based off of emotion. They're making investments off of what is going to be a good return for the people they're investing money for themselves. And so if you look at that, it comes back to, remove the emotion. What's quality value that's going to give you a long-term return? Mm-hmm. And I've taken that approach when we do that with Maya. I take the same approach when I look at land. And it just happens to be as a farmer by nature, and from an experience of my past experience farming, as well from an equipment side, I'm looking for value, not emotion, of what I think really makes for a good investment. And so the two do have a fair amount of parallels from that basis.
Do you get a lot of pushback? Because that's probably the biggest thing I hear of in land investing is we got to get the investors out of here. Bill Gates is buying up all the farmland, and now the farmers can't own the land themselves because they've driven the price up so high. I mean, do you get a lot of that?
Yeah, you do, and there is I can't say that there's a right answer to saying, hey, one person shouldn't own. I mean, I'm a capitalist, so I believe in capitalism and that opportunity piece. But I hear the argument, and I accept the argument as a farmer side of that Bill Gates piece of owning a huge amount of land where it's at. If you take the state of Iowa, which has a corporate farmland ownership laws, you can't own farmland under corporate ownership, and you take the state of Illinois that does not, wide open. Mm-hmm. If you take farm ground in eastern Iowa and take farm ground in western Illinois,
prices are comparable.
Prices are comparable.
Right.
Similar dirt, similar rain patterns, similar production. It's virtually you have a river splitting the states. Prices are comparable.
I hadn't thought about that. Have you thought about that?
So take that as a synopsis and say, all right, so is the corporate farmland buyer or the big wealthy person or groups, are they actually driving up the price? And I would argue very clearly no. 95% of the U.S. farmland is owned by farmers.
Right.
It's not. I mean, the institution piece and the big dollar investors, they're a fraction. I mean, they're a small percentage of it. So the vast majority of that is driven off of farmers. And I always use that Iowa, Illinois example because it's a classic example of corporate ownership versus not.
Yeah. And I mean, there's ways around the corporate ownership, right? There's just general high wealth investors that aren't corporate that just want to own around. And so I'm coming from the devil's advocate here. That doesn't necessarily mean that we have a guy that wants to do a show, and I kind of want to do the show. He thinks that we need to regulate farm ownership by tax, basically whether you have what's the Schedule F, whether you're actually farming the ground or not. And his argument is somewhat compelling to, well, if an outside investor, corporate or not, say they're snowbirds living in Arizona or, they moved off the farm 2 generations ago and they live in California, Florida, whatever, and they own the ground, well, and then these farmers are paying for it. And, well, that tax dollar, that basically their rent checks leaving that county, leaving Iowa, leaving their community. And so I was like, man, I don't really have an argument against it because if you're wanting to put money back into that community, I don't know what you do. I mean, it's tough because I'm a capitalist as well,
right?
And it's like I want to be able to own ground wherever, know, and not told that I can't.
Yeah, I mean, I think if you want to go to that point, then are you going to say to every tech investor, well, you got to be using that tech if you want to own it? I mean, where does that line
That's
stop?
a good point.
I mean, that opens up a can of worms that never ever ends.
Right.
The other thing
Can't be a podcaster unless you edit your own show.
Correct. Or you do all your own content. So I mean that to me it's kind of I hear it. I wouldn't agree with it. The other thing is you have a farm economy based off of equity and debt, and your ability to go borrow debt and leverage against that, as well as what you can operate and make for cash on that farming piece. Ultimately, very few farmers do I know own every single piece of ground that they own. Mm-hmm. So if you want to go and change that approach, I mean, are you going to say to everybody, hey, we're going to devalue farmland by 50, 75% because ultimately we're going to take all the money out of that Schedule F? Well, of course not. You would tank a lot of things in the economy as well as screw up a massive amount of things. So I think it's an interesting concept, but it's just not really realistic.
Right. Yeah. That's what I was like, I'm willing to have the conversation. I just don't know what you could do. I mean, that would take a massive undertaking of probably a lot of politicians and things of that nature. And, they got their hands in things. I don't think it would ever, come to fruition.
So why is there an institutional interest in investing in farmland?
Yeah, the institutional interest in farmland is there's ultimately two components. So you go and buy a farm, you're going to get so you're an investor. You're going to go buy a $10,000 acre farm in Iowa today. Cap rates are going to be anywhere between 2.5% and 3.5%. So that's going to be.
What's a cap rate?
So your cap rate is going to be, if that farm's $10,000 an acre, I'm going to rent that farm for $350 an acre. That's my capital return at 3.5%. Now I'm going to pay, if I'm the landowner, I'm going to pay taxes, and I may have some upkeep on that. So let's say that's going to whittle me down to 3%. So that's going to be, as you can view it, as that's your dividend, is I'm going to get a 3% dividend. In the market today would probably say, well, I get 5% if I go put my money in a bank because interest rates are high today. Mm-hmm. I take my 5%, and there's an argument to say I should just go take my 5%. But the other component is farmland is an appreciating asset. If you take farmland back to the Second World War, virtually 1944 when we've kept track of it, you've got about a 5.4%, I think is the last number I looked at, of long-term appreciation. So you take your 5.4% and you take your 3%, you can get let's call it an 8% IRR, internal rate of return. Now, an 8% return is probably going to beat the stock market, what it's done from the Second World War. And what do you own? You own a hard asset that you can see, feel, touch, that you've got deed and title to, that you've got farmers that have crop insurance on from an insurance basis, and it's producing food that's going into the consumer and the world demand. If you can do that on a real asset that I would argue is relatively low risk of U.S. farm ground, of having someone, you notice there's no farm ground that you drive by that's good farm ground that's growing in grass because no one wants to farm it. There's no occupancy issues like there would be in the housing market. So you have a relatively low risk and honestly a pretty solid return if you look at overall markets of what you want for if you think of your long-term return in your 401k of hoping I get a 7%, you probably can beat that on a real asset. And you can put leverage on it. You can borrow money against that as well for your equity in it. So it makes a very compelling story. If you looked at, if an institutional investor goes and looks at infrastructure, I'm going to buy an apartment building in New York City. I'm probably going to want a double-digit cap rate. I'm probably going to want 10% because you know what? I've got a depreciating asset that's ultimately worth less value every year. If I go buy an orchard in California, my trees are depreciating. They've got a 40-year life cycle, and they're depreciating out. And at the end, I'm on a huge capex to go back and replace them. Yep. So if I'm in that situation, then I want a higher cash yield because I have to account for the fact that I've actually depreciating in value. If you look at just pure row crop farmland, you've got a dividend, cash rent, cash yield, crop share, however you want to structure your lease, and an appreciating asset on a relatively low risk. And I think if you look at the world of investing and what you can invest in today, whether it's venture to private equity to debt, it's a pretty solid return for a relatively low risk. And then you can get into the tax benefits of owning farmland, as well as the emotional piece of, hey, is that farmland going to have cover crops on it? Are we going to reduce environmental impacts? Are we going to reduce erosion? Are we doing a better job of managing our water usage if it's irrigated? There's all those other positive effects that come in. And some of that can be affected by a landowner. Some of it can be more challenging depending on the lease structures, as you all know. But so there's other side benefits besides just having a market return that's honestly going to probably beat the stock market.
I think if Dave was here, he'd say the 3 T's. He said that before. I looked it up here. I don't think that this says on here on Forbes says toilets, trash, and taxes, but you got taxes. But it's dealing with tenants in all those apartment buildings and all that stuff. You don't have a lot of that, I would say drama.
Yeah.
Right, with that kind of stuff, having to evict people not taking care of the place.
Correct.
And most of these leases that are in place are requiring nutrient minimums and replacing what you take off. I mean, there's a lot of ways to protect that asset so it doesn't depreciate.
Correct. And good farm managers, and people listening will have good farm managers and good asset managers, or they themselves, if they own the land, they're their own farmland asset manager. You don't want to mine. You're not mining the soil. You're managing your erosion. You're taking care of that and trying to honestly improve it. I think if you look at soil organic matter, and you can look at soil organic matter as about 56% sequestered carbon. When we talk about the carbon in the market, and there's a lot of talk on that, and we know from science that every 1% of organic matter holds 20,000 gallons of water and gives you 30 pounds of free nitrogen. Nitrogen being the most needed production nutrient we're going to need. So, there's a lot of things you can do, whether you own the farm or you're managing the farm, to try to improve your soil organic matter and your soil health, which ultimately should increase the value of your asset over long term as well, because you're improving farm ground. I'll tell you an interesting piece. If you went across to Iowa in the 1850s when it was grassland and prairie, you'd probably found about an average soil organic matter of around 7%. That's about the plateau of where that would have sat at in a natural state. Today, you'd probably find Iowa, I'm going to guess it's going to be around 3%. Might be 2.5 to 3.5%. So we probably have degraded 400 basis points in 150 years of soil organic matter through production ag as well as changes to it. If you look at that and say, well, can I do a good job of managing ground and have a long-term focus that I want to add 1% organic matter to that, which is going to, trust me, it isn't going to happen overnight.
Yeah.
It might take you the next decade or better to do it. But you look at that from what organic matter does from carbon, nitrogen, water, and everybody knows that farms, you got a high organic matter rich soil, you produce better crops on it. There's a natural reason why some farms are good and some are bad. Those are all things that you can, as well as an investor, you're helping to build on that appreciation by improving your asset. No different than putting paint on your house that you own as a rental. The problem with, or the challenge of what you variants look at is, when you own commercial real estate or residential, you have hot water heaters, you have roofs, you have septic, you have tenors to throw a keg through the wall after Iowa State loses. Those type of things. Yeah. Iowa State rarely loses for the record to the audience, but those are things you typically predominantly aren't going to deal with on farm ground. If you have got good operators on your farm, most American farmers are going to treat that farm like they own it, because you know what, they want to be able to farm that, right, and hope that their kids get to farm it next. And if it's a fair lease and a good property, they're making their money on an annual basis off of what they're producing from that crop. They want to have it long term, so they want to treat it well. So you are in kind of that, versus the guy that rents the house probably is not going to live in that house for the rest of his life.
Correct. They're renting because they think it's a short term. Yeah.
They think it's a short term deal. Where I believe if you do it right, farmers will look at that as, hey, if I treat this well, and you see leases out there, you talk to people, we've rented this farm for 50 years through 3 generations. It's because they've treated it like it's their own, and when the landowner looks at it, or the land manager, he says, they do a fantastic job. Like, why would I ever take that away from them?
I think the farmer argument is a lot of these managed farms get the BTOs. I'm just going to say that out there. The big time operators that are farming 10, 20,000, 50,000 acres, and they're paying top dollar.
Yep.
And you want the best return for, the people that are investing their money, right?
Sure.
So $500 an acre, that's probably where you're getting the pushback, because the little guys that just they haven't scaled to that point, they can't afford it.
I also know that listening to what some of the comments we get back is, even if the smaller operators were willing to pay the $500 an acre, some farm managers would rather just work with 1 or 2 operators rather than a dozen. It's less work for them. It's the natural way.
And I've felt that as a younger farmer. Reached out to several of the managed farms in this area. Hey, next time a farm comes up for sale, I'd love you to think of me. I think I got a letter one time to put a bid in. And I put my best foot forward, and it wasn't good enough.
Yeah. But there is an argument to be said for, if you take any of the big farmland management companies, yes, it's probably realistically easier if you got 10,000 acres to rent and you have 2 farmers that'll pick it up.
Yeah.
They're financially stable, they pay their rents on time, versus having 20 20 people to do it. One of the beautiful things about farmland, though, is if you go buy a quarter section at 160 acres or 1,000 acres, you have that decision as the landowner to who either you want to put on as manager or how you want to do it. And if you want to rent that to a young guy that's local, that say, I want to give him an opportunity or a chance versus not. So it kind of comes back to that capitalism piece of you got to make that decision is what you see as best. I love the essence of being able to take land that institutional type investors buy and see them give that to an opportunity to someone who's 25 years old and trying to grow and try to farm. Because that's the next generation of farmers. We know the average age of the U.S. farmer is 59 and a half or 60 today. So I know from USDA data, 33% of the land's going to trade. And what is it, 30 or 40% of the farmers are going to retire in the next decade. So I also think there's a thought process of how do you work with that next generation and give them the opportunity. But that all comes down to the individual on who buys that asset.
Did he just say farmers retire?
Die.
Oh, die.
Sorry.
Die.
Yeah. Do you think that there's maybe some regulation, which, I mean, that's a tough word, because a lot of us don't like government getting in our lives, but would there be like a tax credit or something that could maybe help the younger farmers?
Well, there is. There is a tax credit.
There is.
I mean, it's not super substantial.
But no one uses it. It's not enough to go, yeah, I'm definitely going to pick this guy that can only pay me $400 an acre over, this BTO that can pay me $500. Is there anything like that could incentivize?
I mean, maybe there's probably programs through FSA and different things on the young farmer side that could be more aggressive. I think if you look back at some of the young farmer programs 20 years ago, they were pretty attractive for you to go out and get started farming, but we also had $4,000 acre farmland and reasonable price, but I would argue equipment, which all of that is changed. So I think there's probably some change from a policy standpoint that could be done to it. But honestly, when you get into policy, you get into a whole spider web of things that happen. So I would love to see it happen. I think America needs the next generation of farmers to not leave the rural communities and go to the city and get a job, but stay on and continue to produce crops.
So I'm just reading here. It's 10% of the gross rental income on the first, second, and third year of the rental agreement, up to a maximum of $7,000 per year of a tax credit if you rented to a
tax credit. It's not even
and $7,000. That's going to for a big time institutional investor.
That covers an 80 acre. That covers $100 difference on an 80 acre parcel.
I mean, so it's not. Yeah, they're not going to do.
So
deal with that.
we haven't uncovered a lot on this show yet that most of our listeners aren't already sitting here shaking their head up and down with. They're going to agree with a lot of the comments. A lot of them understand the basis of why investors like this asset. So now let's flip it, and I want to know, our Farm4Profit listeners have been treating their farms like businesses, continuing to run at high levels of margins, or at least the highest level available for them, and they've been in a position they're ready to start investing themselves. Not talking about joining a fund. I'm talking about let's now share with them what you look at when you identify a farm to buy. Let's go that route of what matters to Justin.
Yeah, what matters to me as I look at it is soil quality is very high on the list. Geographical location, like whether it's irrigated or rain patterns, where that's irrigated, do I have long-term aquifers? Do I have good water availability? What do regulations look like coming down on it? Infrastructure, if it is irrigated, what do my pivots look like? Are they electric versus diesel? My efficiencies on it, grain storage, and then does it come with infrastructure? Like there are some people that want to buy a farm that's got a old farmhouse on it, an old yard. If you're a farmer that's looking to invest money in farmland, my mother always had a great statement of us kids growing up that houses don't make any money. That was a farmer's view, which, yes, you could be a residential investor and make money on it. But, you're buying that to farm, not for some of the headaches that come with it for that. So it's really looking at those categories. And then I think you've got to look at basis, which if I'm just looking at investing in land, like there are places that have a way worse basis on corn and soybeans than other areas. There's also places that have a higher nutrient costability, whether you're using manure or synthetic fertilizers, on what you get. So if you start looking at the economics of basis, which is your marketability and your cost of inputs, and then infrastructure and quality of land, and then start looking at comps in an area of what is stuff actually trading for and what are market rents. Because I don't care if you're going to farm it yourself or not, you want to look at it and say, what is ground renting here for? If I'm trading 10,000 acre ground and it's renting for $200 an acre, it probably means I have a bunch of either older farmers that don't want to expand, a lack of younger farmers, or a lack of people in the market that are trying to go in and aggressively go after that. So either they're not producing enough on that to make it worth them to pay a higher dollar rent to get you in that cap rate range that you ought to be looking at. And so ultimately, the average farmer, in my opinion, does not go look at a farm and say, what would my cap rate be or what would my IRR be on this if I buy this? Because I'm buying that land, I'm making a long-term investment, no different than investing in anything else. I think you really should look at that, because what it'll do is it'll remove some of the emotion. An institutional investor or someone that wants to be a true investor versus a farmer, you'll take two quarter sections and you'll have someone that lives across the road from that has always wanted to own that quarter section, or their grandpa used to farm it. And they're going to go in there and they're going to bid whatever they can to own it. An investor is going to look at that, and they're going to look at that and they're going to say, I have zero emotional ties to it. Here's what I can pay for it to get a long-term return on what I expect appreciation to be in for a cash yield. And if I don't buy that one, I'll buy the one here, and I'll buy the one here, and I'll buy the one there. So the farmer's got to ask himself, am I buying this just because it's operationally fits in my operation? Which if you are, that's a core effect of where does it sit logistically and what has it got and how does it fit into your operation. But if you're looking at it as a farmer of, I want to put my money into land, it's what I know, it's where I've made my money. And maybe it's not as relevant if you personally farm it. I'm doing it as an investment. Then treat it as an investment like everybody else in the world would when you go to make an investment in anything. It's do your due diligence and decide, does that actually make a feasible return? Is it actually a good investment? And I hate to say this, but farmers are not great at that.
Right. There's too much emotion.
We know.
There is emotion in all of it. I'm guilty, done it myself. Yep. We'll probably do it again. But it's a lot different when you're buying that knowing I'm making an emotional investment because I want this because it sits across the road from what I already farm and I own and I plan to spend the rest of my life here versus I'm going to go in and buy this as an investment for my portfolio and my long-term view. And those to me that's like apples and oranges. That's basketball and football.
So you as potentially looking to buy something as an investor, if you already own a 160 and 160 comes next door, what is the value? Does that provide any value in your analysis?
Yeah, it would. For me,
it's got to contribute something.
It absolutely does. I mean, then you can look at it and say, hey, it's probably easier for me to keep the same one tenant versus two in place, and there are some operational efficiencies for him. If you're going to look at it, you want to look at it as well as say, is the guy farming it going to be able to make money? The word sustainability is used a lot in a lot of conversation. Mm-hmm. I believe where sustainability is not often used is, are you sustainably, financially going to be able to continue to move forward? It would do me no good to go buy a farm, or you go buy a farm to have Tanner farm and say, Tanner, I'm going to have to charge you $600 an acre to make this work for me. And Tanner says, I don't give a shit. I'm expanding the operation. We're going to do it.
Yeah.
And in 24 months, Tanner's broke and out of business, and now you're dealing with the fallout of that and the mess of trying to find a tenant. It's not sustainable. And ultimately, the market will do its job, and at some point, that person will say that doesn't work. So coming back to your point, if you can buy two pieces of ground together, there is a value of having a bigger package. Also, that probably trades easier someday if you want to trade it. If you want to own it for the rest of your life, it's probably still beneficial of having it together versus spread out. And then if you looked at it as an investment deal of, hey, do I want to have a quarter section in Iowa and one in North Dakota. Well, even you as a farmer, if you're not going to farm those, if you said, I'm going to invest some money in ground and I don't care if I farm it, I'll rent other ground. Do you really want to take care of a farm in North Dakota and one in Iowa? It's a much bigger pain in the rear end than it would be if they were across the road from each other someplace.
Depends on how much the return's going to be.
That's a great answer,
Right?
Corey. Corey's on track.
I will say,
Corey, you took some of this thought process route.
What finally opened my eyes to this, I bought a farm in 2020, my first farm with my FSA loan, and I've planned on owning it all of my life. And then I got approached by investors because they had 1031 money and sold ground on the edge of town for a lot of money, And I kind of fought back for a little bit, but then they offered me double what I paid for it. I'm like, well, fine, I'll figure it out. I'll 1031 myself. Yep. And finally, when I took emotion out of it, I wanted ground around my farm. I went and bought a farm 2 counties over because around my area it went crazy high.
Yep.
And that farm, actually with a loan, cash flowed.
Yep.
I was able. I couldn't farm it myself, which emotionally sucks.
Couldn't by distance, or couldn't.
I shouldn't say I physically could. I mean, it took about 2 hours, 3 hours in a tractor if I wanted to go to. I wasn't willing to go there, but so I rented it, or I actually 50-50 crop shared it.
Sure.
Because there were some tax benefits to do that
absolutely.
and all that. So, but yeah, when I took the emotion out of it, it unlocked everything.
Well, and you just made a comment I think is interesting when you come back and looking at large-scale farming. There's a lot of people who will spend 2 or 3 hours driving down the road in a tractor, and more power to you if you want to do that. There is an economic time for your time and equipment and costs, and then management, because it's not as easy to manage when something's going on with your crop if it's across the road and you drive by it every morning versus an hour or 2 away, which I'm not knocking. There's people that do that and it works well for them. But if you went and bought a quarter section, it probably wouldn't make a lot of sense for you, or a half section to go do that. So for you, that went from something you were farming to a really good investment, which is a great way to look at it, in my opinion.
And it's already turned around, and I'm actually selling it again. I got a purchase agreement signed for more than I bought it for, and now I'm going to try to buy around here again. But if I can't, I know that I'll find something else out of the area, whatever. So.
And you're going to look at soil quality. You're going to look at the geographical area. You're going to pay attention to the rain patterns and whether or not, because the farm you're potentially selling had irrigation on it.
It did have irrigation.
And you understood your limitations there.
Yep.
When you mentioned the storage or the outbuildings comment, I thought that was interesting because I've had a couple of local guys that wanted to buy an 80 that had a house on it because they saw that house as $1,300 a month in rent.
Sure.
Extra cash flow, ready to go. I don't think they looked past the fact that it's your 3 Ts. They're still on call to fix the toilet or have to put a new roof on it in a couple of years or whatever it is.
So my argument to that, the guys that are farming my farm, they actually look for farms with houses on them. And then they buy the whole farm, and the farms, the house is run down. They fix it up in the wintertime when they're a little slower, and then they sell that because there's such a high demand for 2-3 acres to get out to the country, and they can sell that for $50,000 an acre to someone from town if they can.
But that comes back to your individual time allotment and what you've got. If you took that as there's investors that invest in fixer-uppers all over the countryside, and there's people that want to buy a turnkey deal and put it on Airbnb. It's very similar in farm ground. I mean, if you referenced Gates for it. If Gates wants to own 100,000 acres, he probably doesn't want to mess around and try to fix up a dozen farmhouses, right? No. So he's got a different viewpoint on it. To your point, if I'm a farmer, I probably want the acreage on there because I'm probably going to use my downtime in the winter to go remount, fix it, and to your point, probably sell it for a lot of money, which helps pay for the farm.
Or maybe it's a house for your hired hand, or whatever.
And there is a lot of that hey, if this farm is isolated or if I've got a lot of employees, I may need a place to put someone, and keeping good help is hard. So that's a great advantage.
Yep.
Are there tax incentives for investors or for owners of farmland? Is there a tax incentive?
Yeah, I mean there's a slew of different things on the tax side. Honestly, number one, you naturally get to appreciate things like your tile lines and your fence lines and your center pivot. irrigation, and then you look at Section 180, and you can depreciate your nutrients and take that off your adjusted growth income, and that can be sizable. So there are a bunch of tax benefits there. You can also look at doing things on conservation easements. Like there's a lot of stuff going on in conservation easements that are different than the old conservation easements that I grew up with, of putting it in grass for a 99-year lease. They're to keep solar and wind off of certain things and keep them in production. So there is a bunch of things on the tax side as well that is beneficial. So if you look at it as, hey, I'm paying taxes, I want an investment. If I make my investment in the NASDAQ in a stock, I'm going to lose out on a lot of those opportunities that can help me if you look at your overall financial picture, which is honestly what I think everybody should be looking at, is that overall view look. Well, if you're paying taxes, there might be some really good opportunities to help you reduce your taxable income. And then you mentioned the 1031 piece, which is also a great way for people to roll out of properties after they built up some equity in it and roll into something else, which is also a benefit. So I think there's a lot of things around the tax code side that are beneficial to landowners beyond just having a return that I would argue is going to beat the market averages.
Right.
So with your pulse on land investment, what do you see the current interest rate environment for CDs, stock market, having as an effect on the future of land values?
Where I think the interest, well, it does a couple things. One, when you start looking at your long-term debt and you're servicing your debt, I mean, that definitely, to me, contracts the market because there's less buyers out there willing to go take that quantity of debt and do it. But then you run into the cash yield issue that we touched on earlier, is if I can get 5% in a bank and I'm going to get 2.5% effectively in land, and you start looking at it and saying, well, if the market's going to pay me higher to leave it sit there and I have all the liquidity of going to do something else with it, it's a negative effect. And ultimately, the cash yield piece, when your cash yields compress, it ultimately affects the value of your land, because your land is based off of that cap rate is based off of what, if you're getting $250 an acre rent on your $10,000 acre ground, and all of a sudden you can buy that farm at $5,000, you just went to a 5% cash yield. So I mean, it's ultimately driven off of that value. So I think the two together definitely have effect in interest rates, and I think the entire market is seeing. I would argue that land hasn't gone down, but you do see stuff on the market a lot longer than it was, let's say, at the height of things a few years ago when interest rates were low and stuff traded really well. I think another interesting commentary or point is the debt-to-equity ratio on farmland, 13.5%. So you take the 1980s farm crisis when debt was through the roof, and now you look at it, and you could roughly say, hey, you take the Midwest at 230 million acres or 232 million acres. You can roughly say, hey, there's 13% debt against that. I mean, if you looked at most institutional investing things, they'd say, why isn't there more leverage on this? Consequently, there's a lot of people with a lot of equity, and it might not be because they paid a lot down. Right. But they bought farm ground at $3,000 an acre, and it's now trading at $13, $14. Yeah. And they've been servicing their payments on it, so they're sitting on a lot of equity that allows them to use that, which puts farmland in a whole different tier than I think some other asset classes when you look at that, because there is a ton of equity sitting out there, and the banks want a loan against that. It's a low risk loan for them.
Yeah,
to
the
do
bank
that.
probably looks at that as one of the most solid pieces of equity, would you say, Tanner?
Oh, it's the first loan category that we would prefer.
Sure.
It doesn't run away.
No.
You can't hide it from us. I mean, it's always going to be there. But then the stability, the equity position, the predictability. I mean, most times if there's going to be a land market value collapse, it doesn't happen in 2 months.
Correct.
There's going to be opportunities to get out.
Yep.
Now, ultra conservative, most financial institutions are still only loaning 45 to 50% loan to value.
Yep.
Still leaving a big cushion in there, which I don't know if I fully agree with, but it is a very interesting consideration because...
Which that would be an argument for me as a farmer, is like, I can't compete with these institutional investors because you're only giving me 40% of what this is worth, and I'm having to come up with $7,000 an acre out of pocket. or equity or whatever. And so most of the people that would work with an institutional investor, that's cash, right?
Yeah.
They're not having to pay 6, 7, 8% interest on this.
Right,
Yeah,
because
but-
interest, there's that fine balance, not to interrupt you. There's a fine balance, though, when you're investing between interest as a cost and interest as a way to propel you into further return on your investment.
Correct. So yes, you could argue the cash buyer comes in and he doesn't have to pay the 7 or 8% interest, but you gotta figure it's like a hurdle rate or a value of money is. He could also put that someplace else to get 8%. So there's no free lunch in it. He just has the cash from someplace else.
Yeah.
I mean, the unfortunate part is it would be nice if the lending institutions looked at it and said, "Hey, we can, the likelihood that farmland is going to crash by 50% in the next 60 days is virtually impossible unless we're in World War III, probably. Mm-hmm. So therefore, I can probably take a bit more risk, and I can probably loan you 80% on that because the likelihood that it's going to crush by 20 is probably low in today's market." And to your point, what a secured asset for the lender to have. Like, it isn't a piece of equipment that's going to drive off in the middle of the night. It's there. You know the value. There's a great system of comps in America of what comps are. There's APH, there's crop data, there's crop insurance. There's all these things to back into that asset as to how you get to the value to loan against it.
And that is, it's a wild market to look at. But then we talk cash flow. Yeah, we could give you an 80% loan, but if we can't get a 40% loan to cash flow right now on a standard farm purchase, how are you going to cash flow twice as much debt?
Correct.
So there's so many different angles we can look at it from that side of it, as far as that goes.
Correct. And you have to look at the cash flow piece. But if you just looked at it from a pure asset basis, you'd say you should loan more. But yeah, back to your point, it kind of comes back to almost that concept of leasing land to someone is, I can lease to you, but if I look at the numbers and I know there is no way this is going to ever work for you, whether you're the banker or whether you're the asset manager, you're leading someone down to a road of a bad end.
Right.
So one of the hot topics that we have been getting overrun with lately in ag is this carbon and alternate forms of energy, solar, wind, all this stuff. What's like an institutional investor look at? Let me preface this. When we do shows on this stuff, people say you give them your data and they're just going to take your farm. You let these investors come in, they're just going to put solar farms everywhere. Is that the case?
I would argue no. I mean, I think there's a doomsday argument to say yes, they're going to cover the state with solar. And if you look at some of the data of what wind turbines for Iowa by 2050, it's alarming.
Really?
Yeah. Mm-hmm. So, is there a risk that it could happen? I suppose anything is possible. I don't have a crystal ball. I would say when you look at solar, most of the solar lease contracts you see do pay extremely well. I mean, they pay in that $700 to $1,000 an acre return. So if it sits in the right place, there are investors or farmers that are going to take advantage of that. I do think there's some opportunities for, I don't think the technology is there yet, but I think there's opportunities for the people that are irrigated to put solar in dryland corners and try to reduce their energy costs, which I think is a good economic value to the farmer. It's also a good environmental piece, and there's a lot of places in rural America you're short on electricity in the middle of summer irrigating. So I think there's value opportunities in that, no different than there is in places where people have put wind and farmed around them. Mm-hmm. I think the question is, as a purist, what does it do to farmland if you're taking it out, putting it in? And I'm all about producing food and feeding people, so I also understand the energy issue and topic. So I don't know that I'd have a great definitive side to look at it. I think investors would look at it as an approach of what is the economic return versus my long-term benefit.
Right. That, there's been multiple times in this interview, just like the first one we did, where I kind of went, I didn't think about that. Yeah, the solar on dryland corners kind of makes sense.
Right. And so I got to attend Future Farmers Forum 3 weeks ago now down in Des Moines, and then we got a tour up at Iowa State, and I learned a new word, agrivoltaics. It is the ag or farming with solar panels. So they are studying not just what you can grow underneath, but like different orientations, how high the frame should be, and all that. Because there's there's a lot of grass and things that you can graze that don't need full sunlight.
Yep.
And then you could have sheep, goats, cattle, whatever underneath. Then they were looking at fruits and vegetables growing under that. Like it could almost be like a community garden under, type that, producing food for the community that doesn't need full light. So that kind of brought it full circle of like, it doesn't just have to be a solar farm.
Yep.
So yeah, if you can get good return and food production,
Correct.
that seems cool.
We also saw on the news just a couple weeks ago that there was a really large solar farm in Texas that got slammed with hail.
Yeah.
And
hail no.
oh, hell no.
Yeah.
No, and that happens. So I wouldn't say it's without maintenance and upkeep as well on solar. And then I think last piece to your point on carbon credits, you see a lot in the market. There's a lot of talk. It's a very popular conversation piece on carbon credits in land. I do think there is something there of a value because of the offsets that are required for a lot of corporations and a lot of companies that are looking for that. I would say there's probably a decent amount of that yet to develop in the market. You've seen some of the companies that have gone out, and I'm not going to name them, that have gone out and offered to buy carbon credits, and a lot of that has not really gone very far. So consequently, I think that also makes people gun shy about giving up something.
Very.
It's much like a mineral, right? And I would raise my hand and say I'd be very slow to want to give that up.
Right.
So I think my perspective on it and the way I would view it is, it's interesting. It's not quite there yet. And I would, my last piece is, it'd be interesting to see if government backs more of that or if it's all private. And I don't think the market's figured that out yet either.
Is that
as far as
something
that
that the institutional investor is actually looking at?
I think some of them are.
Yeah.
I think some of them are looking at it as saying, hey, that's a long-term value piece, and it also adds to my total return if I can do it. I think we're in the early stages of that, at least from what I've seen.
Yep.
There are places where you read about it or you talk to guys that have utilized it, but I don't think it's widespread today.
Because we just put out our show on that new Section 45Z of the Inflation Reduction Act that's for biofuels. And we put that out on Monday. Today is Thursday, and we've just got probably 90% hate comments on that stuff from farmers and saying, dangle the carrot, But all of these carbon programs have been like $20, $30 an acre. Yeah. Probably not enough to go, completely change an operation because it's very expensive to get some of this equipment and things like that. This 45Z thing is actually starting to show the true value of what someone's willing to pay. We're talking hundreds of dollars an acre potentially. Yeah. That could be huge for someone that's owning or farming the land.
It's also one of those weird things. Our audience is waiting for us to put our finger on a company and say, these are the people to do it with, to sign up with, to go with. We don't have any more knowledge than they do. We're not going to do that. But it is a very interesting point to where it's that fine balance between people are sick of hearing about it and aren't going to enroll because they don't trust the process, or they're chomping at the bit for someone to go all in behind the program and do it. I tell you what, though, one place that we are really comfortable going all in at is running a Maya cornhead.
That is
absolutely
what. Well, that was your reaction. Just a little laugh.
Just because I knew it was coming.
Extremely.
I knew how corny you were going to be about it.
What an awesome transition that was. And that's what you give me.
Carbon to Maya cornhead. That makes sense. No, I get it. No. We love our Maya cornhead. We actually had that 12-row folding last fall. What a game changer!
How did you enjoy the folding part?
Oh my gosh! So I've always been an 8-row cornhead guy, and we just leave it on, and just run people off the road. What it feels like in certain situations. We don't do that, but it does. It's challenging, right? You have to think about your path. Having that folding cornhead and 12 rows, it was a lot changed to go into fall, and man, we can't keep when we get over 3 miles away. We can't keep up with it.
It's interesting. We talked earlier about land and geographic location. You talked about your 1031 way. I think as technology has changed where you can put a 12 or 16-row cornhead on a combine, pull it in the field, fold it, and go down the road, it makes some of the logistical piece easier. And all equipment is changing in that basis, but I think that's a beautiful piece to it. I'd also argue that the folding cornhead is ultimately safer because a lot of guys will take an 8-row, which is 20 foot wide, and take it down a road at 9 o'clock at night when they pull out of the field. And you know what? There is a risk to that as well.
Yep.
Yeah, it's interesting because my in-laws, we're talking about it right now. Do we go with the 16-row folding, or do you just go 16-row standard and trailer it? Well, I started thinking about some of our listeners that are running multiple combines, and it really adds up a lot when you think about how many times you take a head off and put a head on, and how many guys it takes to do that. Even if you're going to trailer it behind your combine, or you're going to have pickups on site.
Yep.
And then I don't know, maybe it's just the corn heads that we've ran up until now, but I feel like we fight the PTO shafts on and off all the time.
Yeah.
To where if it can stay on the combine,
Yeah.
that's just one less.
I mean, you got the cost of owning a trailer. You got someone then to move it typically. Mm-hmm. At some point, someone will leave the single point on and rip the hydraulics off. Been done before. Mm-hmm. And then it's taking off, putting it on. It's just time of that. When I farmed in Ukraine and we had 8 corn heads, I used to always say it was at least a full cigarette break to take it off and a full cigarette break to put it back on, if not a drink in between. And then you take that across 8 and you take that across a long harvest season. There is a time aspect of it. There's a people aspect of it. There's a cost aspect of it. Today, in my view, if you're going to buy a 12 or 16 row, you should probably buy a folding corn. Unless there are guys in parts of the country, Western Nebraska, classic place where you can drive down the road with a 16-row corn head. The roads are wide and there's no one on them. And I get that. You know what? That probably makes sense. Yep. If you're going to be in a place where you have to take that head off very many times, well, how many times you take your bean platform off? And then you look at that and you put the corn head on and you put it on at the start of the season. You don't take it off till you're done. And then you fold it up and go put it in the back of the shop. It's worth its weight all day long.
Yeah. Well, I started to convince them too about resale. We're not going to own this head forever. You know, obviously they build the head that we could own forever, but we're not going to. And at that point, who's going to want a 16-row rigid head?
Right. You look at where the market's going and where it's gone from the last 10 years. Yes, in 5 years from now, or you could run a Maya head for 10 years and probably still work perfectly fine. But the reality is, you also should be looking forward to the future. It's no different than investing. Looking forward to the value and quality and what that is, and there's going to probably be a better value for that. In 10 years, most guys are probably not going to be taking corn heads off, putting them on a trailer, and pulling them down the road.
Right. But you just got back from Spain.
Yes.
So what's the latest and greatest? What'd you learn while you were over there?
Yeah, we had a fantastic trip. We were over in Spain. I mean, for a little bit, you're seeing a lot less corn production in Spain due to markets, what's going on with Europe, the GMO issues there where they restricted on it. So a good thing for America and Maya from that basis is the manufacturing plant has continued to expand, and it really is a state-of-the-art facility, and our volume is going to be continue to be up. So as we've talked about before, in a number of years for us, it was always we could sell every corn head we had. We just could not get enough inventory. We're finally at a point this year where we're going to have excess inventory, and the way we do that is we forecast out what we're going to need. We know what we've got sold, and we just order ahead. So there may be configurations that if someone wants a 16-row folding for a gleaner, we might have to tweak some things or order something different to get it. But ultimately, we're actually going to have some extra inventory and volume. We are in the process of trying to add more dealers on. So if there's anybody listening that is a dealer or has a dealer near them that would be interested in selling a fantastic product, please contact us. Mm-hmm. But yeah, we're in a good position. Really, this year, probably the best position we've ever been of actually having volume. We carry a huge number of parts compared to what an OEM would have at their local inventory. And it's a cost killer for a small business, honestly, to sit on a lot of inventory. But in 10 years, we've never been in a position where we did not have a part or something we needed if someone had a problem. And that's kind of been our mantra is if that ever happens to us, it would be really, really bad. And so we've got a great inventory of parts. We've got a great inventory of down corn. Hopefully we don't have any wind and don't have that issue. And we've got a great inventory of products. We've had a few minor updates on a few things that we've been able to see if we have something that is a problem over a year or two, then we go back to the factory and say, hey, you got a weak point here or something. And so had a few minor things that we've upgraded on some shafts where I think we had one shaft we broke 6 times last year, and we've gone through and had him upgrade that. ideally to move that out. So we have very, very few problems, honestly, with our corn heads, and you can talk to people that own them. It's our retained customer rate is extremely high because it's been a very, very good product at, honestly, a fair price.
I think we've had a Maya head since 2019, so this will be our 5th year with one, and we have a pallet of extra parts if we ever needed them, and the only time we ever pulled anything off of it was human error because Dad ripped the end snout off, and the other stuff was, just some metric bolts. That's all we needed, and that you could pick up. You either had on the shelf or John Deere sold it.
In 2013, when I was in Ukraine, we brought the first corn head to Emmitsburg, Iowa, and we brought an 8-row, and I had him send us 2 extra gearboxes. Just because I was thinking, well, we're the first head in the country. Both gearboxes are still sitting on the shelf in Emmitsburg. They're 10 years old. We have never replaced a gearbox, and I say your main gearboxes that run your left and right side. We have never replaced one on an 8-row in 10 years. We replaced a few on our 12 and our 16s, but never on that. And I think it's a pretty good testament to say they have stood up extremely well on that aspect. Yeah.
Did you hear that? He said that they might not have a configuration for a 16-row that goes on a gleaner. Do you think a gleaner could even pick up a 16-row?
I bet it could.
Okay.
Maybe with a little liquid.
I didn't want
in the
that to
tires.
slide by.
and I would just comment because you bring it up and there's other cornhead manufacturers like this that do it. I think one of the nice things is for us is our ability to go from a Deere Case Lexion or in that scenario gleaner. Is honestly, it's a couple hours. It's changing your faceplate, changing your PTOs, and changing your single point and your electronic hookup relatively quick. And we have done this before on gleaners where we just literally got an offset auger and a different attachment and been able to just take the auger out of a head. If we had someone said, hey, I really need a head, here's what I got.
Sure.
Because it doesn't work as great on a gleaner if you don't make
I don't think you have to worry about that.
I don't think we talked about this in the first episode with you last fall. When did folding corn heads become a thing?
I tell you what, Luis folded his first corn head in 1993.
Was he the first?
He folded a 6-row in 1993, and to his knowledge, he was the first one to fold a corn head. And he did it because...
So did he just flop up the end rows? Is that...
Basically, yeah.
You can't fold
Well,
much.
basically, you've got, I think it's 1.8 meters on the European roads, which is why everybody runs single fatties instead of duals in Europe because of your width restrictions. So he folded a 6-row so they didn't have to take it off. Mm-hmm. And he's often said, I went through all of the problems and the issues of figuring out what strength needs to be done to fold a corn head so I don't break my frames and my pins. And we have, knock on wood as well, we have had very good luck with our folding aspects, which some of the other corn heads have not had that. But he was a very early adapter in the folding aspect. He was a visionary on that.
So I've had several neighbors come over and they go, well, they didn't spare any on building this, did they? When you walk around it, that thing's built.
Yeah. The other thing you mentioned is the down corn row units, the fact that you've got a bunch of those available in case we get into a season like that, and we hope not.
Yep.
But I was going to poke fun at you because I think every dealer that I've stopped in since I've known about Maya, and I see them, I pull in there, everybody's got one on display. You probably have thousands of those row units that are just sitting in dealer shop. Like you could probably build 14 or 18 corn heads out of just down row units.
I don't know if it'd be that many, but we do have a decent amount of them around. I think if you're, as a listener, if you go to the Maya Corn Heads webpage, you see a down corn unit on there. And basically what we do is take the plastic bonnet and the snoot off, and you put a metal one on that runs a gathering chain, which is virtually the same as your gathering chain on your corn head, but it runs vertically right back at you. And what it does is it just, if you got broken over corn, it gets that stuff moved back so you can get a hold of the auger. It replaces your corn reel. Mm-hmm. The nice thing is, if you pull into the next field and it's standing perfectly, you just leave it on, unlike a corn reel in your face or in your way, and it works better than a corn reel. So it's a really unique feature that we prefer people not to have to use. But if you have a Maya corn head, I think the way our front idlers sit and the length of our row unit, I think we do extremely well without down corn in flat and bad conditions. But when you put that on there, I would argue there is no corn head in the world today that can compete with that in a bad situation. Yeah. Well, you ran one in the derecho.
I did, and it's way easier than putting a corn head on or a corn reel on. Way easier. I mean, we're talking once you replace that sprocket in the back that drives it. less than 5 minutes per row. And what I loved about it is I don't have to own them. You guys have an inventory of them. I don't know. Maybe that was a special deal, but you let me buy them, and then you bought them back for $200 less a row than what I bought. I'm like, well, that's way cheaper than owning that old corn reel out in the weeds.
Yeah. And what we've run into a lot of times is we just sometimes we have run short of them. And so we've needed to go back to people that have said, hey, you bought these. You're not going to need them every year. And honestly, it's fine for us. Right. We don't mind trading them back in if we end up in that situation because you might not have down corn for the next 5 years, but someone else might.
Yeah, Illinois might have it bad versus,
And that's something, it's been unique for me with Maya is when we find things that won't stand up in the yields we have, we go back to Luis. Our original down corn units, the front idler where the gathering chain goes around was poly. And if you had really bad down corn and you put a section through it, they'd end up looking like a golf ball over time, which you could change them in 5 minutes. It was easy.
Sure.
But
just why change it?
We just went back to Luis and said, this isn't great. So now he makes them out of aluminum, and they're virtually indestructible. And so it's neat little things like that he just continues to improve to really stand up for what we're doing in our market. Because there is a different market than Brazil is going to grow a safrinha crop at 130 bushel an acre, or different parts of the world versus what we grow here and the way we produce it at the population we do.
That's good. Yeah. I always like talking Maya, but
it's fun.
I didn't know there was that much to learn about corn heads until you started showing me.
There's probably a lot more.
I know.
There probably there's a lot of unique things in the corn head market in that space of what different people do. And I would say to the viewers, I wouldn't say anybody's got a bad corn head, but I also would say no one's got a bad car if they're able to sell it and it's on the road, but there are always better products with better options out there. And I would argue today for the quality of the product, the warranty, the job it does in the diversity from chopping, non-chopping, folding, non-folding, and the price point. And today, as we look at a lot of $4 corn and 7% interest, price comes back to value. It's kind of like that conversation we had earlier about land. It comes back to the value and where the best value is. And I think we have a great value product that holds up really, really well.
Yep. No, that's good. And I appreciate that coming from somebody like you. Having got to meet you and know you over the last 6 months, your thought process and how you evaluate things means a lot to me. And if this is where you've stuck your name and your family's business behind, that means a lot, because today's episode, I even got value out of this. And we've got a land expert on our podcast that we've known I've known Dave since 2014.
Yeah.
If you want to replace him, I'm free on Thursday morning.
I don't know.
Joking, Dave. Dave.
I think this was the third or fourth attempt to get you here in person, so I don't know how free you are.
This is true.
Well, I'll do my best to try and summarize, and then we could probably wrap up today's show, knowing that we'll probably talk again.
Yep.
But do appreciate you sharing the wisdom that you did today. So we initially started off talking about the difference between emotion and investment.
Yep.
There's a lot of that in agriculture, and today we wanted to go with what the investment side of farmland looks like and what things are being considered. We also know, just like with Corey and myself, beauty doesn't always equal value.
And we didn't get into that all that much.
Right. Just because I'm better looking doesn't mean that I bring the most value to
this show. You get more for your money here.
So it could determine whether or not it's the right buy for a long-term hold. We also know that there's quality value that comes with the potential for a long-term hold. We may see that short in-season ROI based on cash rent or revenue or proceeds coming from that land as the cash dividend, the interest off the investment, but you can't forget about the long-term appreciation.
Yep.
Off the top of his hat, Justin said here that since World War II, it's been a little over 5% appreciation on average. That's not every single year. Sometimes that can fluctuate. The reason investors are looking at land is, it's low risk. We don't have to deal with any occupancy issues. Whether you have a hotel or a lake house.
You don't ever see a for rent sign on land very much.
you do not.
Yeah, and you also don't see a lot of the farmland we talked about today falling into the ocean because it's along the shoreline.
Yep.
Curb appeal does matter, and that could be in the form of organic matter or infrastructure or a lot of the different things that we talked about today. Soil quality geographical region, rain path or access to water through irrigation, other infrastructure, storage options, and then the market where the farm is. Paying attention to the basis, the availability of fertilizer, and paying attention to the rental comps in those areas. So ultimately, we got to hold back our emotion. Mm-hmm. We did learn there is some tax incentives that come along when there are some government programs that can help boost the return on investment from your ground. But ultimately, those are the key things we learned today that farmers can use to take emotion out of buying farm ground and make the best investment for their farm.
That's right.
Yep.
Did I miss anything?
I think we missed a lot. I think we could have talked about this for another hour or two, 3, probably. We could dive into it. I mean, land's just, there's so many layers of it. And then I had stuff wrote down. It's like, well, institutions don't just invest in farmland. There's commercial. They might invest in logging, it's so many, it's vast, so.
There is a ton of institutional investment that goes into forest is a big one. And you can go across that to pasture ground. You'll see a lot of people say, well, pasture ground's a harder return than farmland because of where it is. I think to the emotion piece, I kind of wrap on this from my perspective, saying that emotion's not always wrong, because for some people, you may have that farm that is just long term the right fit because it's across the road, or it's a farm you've dreamed of. You just have to ask yourself, am I wearing the investor hat today, or am I wearing the emotional farmer hat? And neither one is wrong. Yeah. I mean, I've done it, so I can see it from both sides. But, if pure economics versus emotion, and you just have to weigh them out and decide which is the right
at
for
this
you.
point in time.
I would argue neither one is wrong, depending on your situation.
And farmers have gotten pretty good at their emotions. Like they've done it a long time, right?
Yeah.
Like they're usually pretty right. But we are dealing with so much more money now than we ever did. If you make the wrong emotional decision, it could, cost you.
Yeah,
dearly.
absolutely.
That's good.
Yep.
Well, Justin, thanks again. We appreciate you hanging out. This is, again, our pleasure. Thanks for coming to Slater.
Yeah.
I love it. You guys have a beautiful studio. You're in God's country here in the middle of Iowa. It's fantastic, and it's great to spend a morning with both of you guys. I appreciate it.
That's good. Listeners, we appreciate you. Thanks for hanging out with us. And until next time, have a good one.